Trent Bradshaw, Brandon Rogers, Bradshaw Financial Planning, and Mind Your Money. Thank you for joining us for this market update. Today is August the 2nd, 2021. On the agenda today, we're going to talk about earnings. Very surprising. These numbers are huge and we need to discuss them. Secondly, we're going to talk a little bit about inflation and what we expect going forward, because that's going to make some decisions in regards to what we do with the portfolios and what we're seeing going forward. And then last, have there been any changes? The portfolio adjustments will be the third thing. All right, let's jump right in. Let's look at this first chart. On the first chart, what you'll see is about 60% of the S&P 500 so far has reported earnings. Well, I'm going to use my cheat sheet and I'm going to go through a couple of these, but you'll see it up on the screen. But look at some of these numbers. Three industry groups that I'll point out, which have been very popular during this second cycle that we're going through, is materials, industrials, and consumer discretionary. Some of the growth rates are between 247% to 788%. So pretty amazing. It's just incredible to see some of these numbers. Not only that, but the sales numbers are anywhere from 10% up to 100% on some of these industry groups. And we expected this, because if you go back to the second quarter of 2020, hey, the economy was shut down. So coming out of this, the second quarter of this year, we knew it was going to be phenomenal numbers. But as a whole, the S&P 500 earnings year-over-year growth right now is 99%, with sales up 27%. I don't think we've ever seen it before.
That's strong.
First time ever. So we're still bullish on the overall market. We're focused on large cap growth. We're focused on technology. Of course, those industry groups have a tremendous amount of cash and are very cash rich. So those are areas that we're focused on. But talk a little bit about inflation and what we're seeing there with wages and other things.
Yeah, inflation is definitely still there. We've seen wages obviously increasing, which will drive inflation. But then we're also seeing some of these probably overinflated industry groups, like your lumber sectors, that is actually coming down. So that's positive.
That had gotten insane, right?
Yeah, it was crazy. About May or so is kind of when it topped out, but it's corrected dramatically. So a good thing, if people are waiting to do projects and things of that nature, you should see some of those lumber prices. I think stick lumber has already come down. Your sheet lumber is still, your OSB, your big plywood sheets are still expensive, but you still probably should see that come down as long as these lumber yards get their higher price lumber out. You should see those prices come down, at Lowe's, Home Depot, or whatever supplier you go to. So that's definitely a positive thing there. I know I got projects I've been putting off too.
Well, it's interesting that you mentioned that, because we got a couple contractors that we work with, and those contractors have mentioned the same thing. It's getting more advantageous now to look at going back to building and doing some projects now, because cost has come down a little bit. Yeah. But what about wage growth? Have we seen anything there that would really power in some inflation? As far as the data?
Yeah, you've got the wage growth for sure that's going to be driving some of that. I know while a lot of the subsidies and everything kind of ending now should kind of get people back to work. That's the intent.
That's a good point, because September the 6th is the last day nationally that they've got the mandate on the additional subsidies that are out there right now for the unemployed. Yeah. So somebody's got to get off the couch and go back to work.
Yeah. So again, that should be a positive thing. Again, looking at the second half of the year, we don't see the growth being as strong as it was the first half, but still growing, right? But just not at that same pace. So still expect to see some good gains going into the second half of the year. But as far as the portfolio is concerned, we have made some tweaks. We're going to change out one another sector basically and put in utility stocks, okay? And that's really more of a dividend play for an inflationary time as well. So trying to get some more high dividend players.
They really do well during deflation and stagflation. And really what we're battling and teetering on right now is stagflation to deflation. We're actually leaning more towards stagflation right now, which means lower growth, higher inflation still in the near term. And that's why utilities seem to do well during those periods.
Yeah. So good. So now that we can have that ability to kind of trade those in the Fidelity accounts, you'll see some slight tweaks in that as well. I think it'll position us a lot better. But again, as always, just let us know if you've got any questions. We'll consistently kind of keep you up to date. Call us, email us, social media, podcasts. We've got a bunch of different ways for you. So again, thank you for everything. Thanks for joining us today. Brandon Rogers, Trent Bradshaw, Mind Your Money.